we'll get a quicker we'll get home. Kevin drew the correct conclusion. Be forewarned though, these are not easy problems. All right, so I don't want anyone to be disappointed that this will just take 2 minutes. These problems are interesting, and they will hopefully reinforce concepts that we've gone through. All right, so on page 462, the authors talk about consequences of a sale or liquidation when the deceased partner is interested in death. And they talk in general terms about that generally with liquidation payments you get the 736A or 736B payment, right? And we talked about it. 736A is a rarity, 736B is the converse. So let's see, and let's, again, much of this, even though some of this is new, the vast majority, 95%, should just be repeating information we picked up in prior chapters. So in each of the following problems below, ABC has 3 equal partners, A, B, and C, in the following balance sheet. Partner A sadly dies on the first day of the current year, and under a buy-sell agreement, his executor sells his interest to D for $45,000. Okay? So there's a new partner who's going to step in. A dies. What result to A's estate if there's a 754 election, no 754 election, or the partnership has made no 754 election, but there's an election under 732D, which permits distributions to get a basis equal to fair market value. So taking a look at this problem, what is the IRD? Okay, and again, guys, let me just say this for the record, not only in this class, partnership tax, but everyone here should know before you finish or complete this program what IRD is. Income with respect to decedent, Code Section 691. Always bear in mind, outside this classroom, 1014, Code Section 1014, does not give basis equal to fair market value rule with respect to IRD. Where's IRD found? Code Section 691, right? Okay, so just, this is a universal concept. All right, so knowing that, what is the partner A dies, what is the fair market value of partner A's interest? 45, right? But what is A's outside tax basis?
30.
And why do you say 30? What's his IRD here?
Oh. 25.
What's the IRD?
No, the IRD is 5.
Okay, get to invoke the almost after 8 o'clock rule. It's 30, hold on, his basis goes from 45 down to 40. Isn't his IRD just 5, guys? It's 1/3 of the receivable. All right, everyone see that? That's all. Don't be disappointed. There's nothing.
His basis was 30.
What was that?
Oh, stepped up. Okay.
Basis becomes equal to the fair market value less the IRD.
Yeah.
So
Okay.
the outside basis is 40. And his share of inside basis, right? Again, you can eyeball this without getting into previously taxed capital. His inside basis is 30, right? We're not going to spend time going through all the permutations. Everyone see that? It's 1/3 of the 90. His inside basis, the share is 30. So how much is the 743B adjustment then, guys? So his outside basis we said is 40. And the inside is 30. Guess what? The 743B adjustment is 10,000. 743B adjustment. And how are we going to divvy it up? We're going to divvy it up between the ordinary income. Not, do we allocate this adjustment of 10,000 to the IRD items? No. 2 letters. No. So it gets allocated to the inventory and goodwill based on their respective fair market values, right? So that the inventory and goodwill, the cash and the cash receivable, the inside plus adjustment equals basis. So when A dies, D's going to buy the interest for $45,000, right? Everyone agree? What code section do you think of when you hear the word sale? 1001, right? So what's the amount realized? Not tricky, guys. It was paid $45,000, right? What's the basis? 40, right? What's the gain? What's the character?
Ordinary.
Ordinary income, right? Attributable to the receivables. This is going to be ordinary income. We're going to see how this varies. You guys are going to be correct. So this is the result in A. Let's take a look at the result in B. Partnership made no 754 election. Okay, does that matter for A's outside basis purposes? No, what's his outside basis? 40, okay? Everyone agree? A's outside basis will still be 40. Now, what's his amount realized to be? So his amount realized is how much? Not realized, guys, code section 1001, 45. Don't get flummoxed. Okay. What's the adjusted basis here? 40. Okay, now, before you say, what is the character of this game, but don't say it out loud. All right, anyone of interest in? What's the character of that game? Remember, this is a sale, right? Yeah, you're chomping at the bits. Character. You got to pull out the 751 gain and then the 741 gain, right? The 751 gain is what kind of income? Ordinary. What's the estate's share of ordinary income absent the 754 election? How much, Reba? What is the estate's share of ordinary income? There's no 754 election, so isn't there an embedded gain to the estate of $5,000 on the receivables and $5,000 on the inventory? So isn't there a $10,000 ordinary income here? If you know it's $10,000 of ordinary income, how much is our 741 gain or loss then? $5,000 loss. It's gotta add up, right, guys? And that stems from the goodwill. Oops, not from the goodwill. I know that he has a $15,000 gain. That was father. I know this is right because, oh, okay, I know why. His outside basis, I'm looking for a $15,000 gain overall, but his outside basis becomes equal, as we know, to 40. So we have to, when all the dust settles, the gain here has to be 5. And that's reflected in these numbers. Okay? So at first I was flummoxing myself, but now I'm comfortable that I got the right answer. Okay? So it's kind of weird, but that's okay. This is a possibility. Everyone good? Question C. I don't know if someone on WebEx is chiming in here. No? Question C. The partnership made no 754 election, but the executor elects under 732D. Okay. And 732D, I'm not sure why the authors are asking this question. 732D only applies to a distribution. There is no distribution being made here. So the answer to C is the same as in B. I repeat, the answer here is the same as in B. All right. Question 2. Partner A dies on the first day of the current year, and an agreement reached prior to his death. Services partnership liquidates A's general partnership interest for $45,000 in cash. Okay. What result to A's estate if there's a specific provision in the agreement that $10,000 for A's interest in the goodwill is interest in the goodwill. So there's a specific provision that it is for goodwill. And either a 754 or 732D election is in effect. So figure out, is there any 736A payments here?
Professor Soler, is this how you're going to ask these questions on the exam?
I don't know if we'll ask these directly, but these are just to give you a helping hand on the prior chapters with what is 736A, 736B.
Okay.
All right, so we don't need to get that complicated, but I'm hoping by going through this exercise, it gives you a better idea, for example, even when you make distributions, that you remember how to distribute property and how Code Section 732 applies. So, on the exam, don't look for anything nearly like this, but the earlier chapters will be very similar to things we've covered in class. So just take a look at this, and I just want you to identify what is the 736A, what is the 736B. Is there any 736A? And remember, it's a service partnership. It's a service partnership. Say again, Ramon?
10,000.
10,000. Why 10,000?
Share of goodwill.
His share of what?
Goodwill.
Is goodwill stated or unstated?
Stated.
It's stated, so it's not 736A. The goodwill here is stated, guys.
Yes.
Does that mean we have no 736A?
No.
Come on, George, what else constitutes 736A? Premium? We don't have any premium payment. Anything else? Receivables. Do we have receivables here? Damn it, we do. So that means we have, how much of 730? See, this is why we want to go through this exercise.
Yeah.
What is the 736A amount here? 5,000, right? Again, just refresher what we did the last chapter. So, right now, goodwill is stated, so it's not a 736A payment. The accounts receivable, his share is, and now Code Section 753 says, Code Section 753 says if you do have a 736A payment, if you do have a 736A payment, that does constitute an amount of IRD. And normally when A dies, sadly A dies, Code Section 1014 applies, right? And what's A's outside basis normally? Fair market value, which is how much? 45,000, but what do we subtract out? Minus 5, right? For the IRD. So what's the outside basis? 40. Just want to make sure you're all with me. Goes from 45 down to 40, right? Because of the IRD. Someone call? 753. 753.
Question.
Question, go for it.
So we get 45,000 in cash. So his basis is affected this.
No, I mean, that's just an amount realized. He's gonna receive 45,000 in cash, but now we're gonna, what that mean, implicit in your question is at some point he's gonna have to recognize that $5,000. In other words, IRD does not escape tax, right, because of this person's death. Appreciation and value of these assets, look, the inventory and goodwill, right, appreciated in value. And by increasing his outside basis from 30 to 40, that appreciation is going to disappear, right, in the hands of the beneficiary, essentially. So I'm just pointing out, just consistent with the notion that IRD does not get a step up in basis, guys. IRD does not get a step up in basis. So his outside basis is 40. And we're told there is a 754 election. Okay. There's a 754 election. What was that, Jonah?
Kind of lost.
Quick question, are we still at
Or
A?
problem 2A.
Yes, okay.
Okay.
So it's not a 754 election then?
They said there is either a 754 or 732D
yeah.
election in effect. You with me, Jonah?
Yes.
Says it's in effect. Okay? So, we know, I hope we know, Then A's outside basis, so we're gonna do problem 2A. A's outside basis is 40. And A's share of the inside basis, right? The overall inside basis is 90, but we can eyeball it and say his share is 30, right? So the 743B adjustment is 10,000. How is that adjustment going to be allocated? To the inventory and goodwill, just like we did before. Right? So A's adjusted basis in the inventory is going to go up by 10. Excuse me, I didn't mean that. 5 and 5, I apologize. It's going to be 5 plus the adjustment of 5 is going to be 10. And this is the inventory. And A's basis and the goodwill is going to be, the share is going to be 5 plus 5 again, equals 10K. Right? So for your notes, A is going to again have a guaranteed payment of $5,000 under 736A. Now, remember, the partnership liquidates A's general partnership for $45,000 cash. What results to A's estate if? Right? Now, let me just call to your attention. What is A's estate receiving, guys?
Cash.
Cash. What is A's estate not receiving?
The other stuff.
The other stuff, which suggests,
Whatever.
which suggests your favorite code section. 751B, disproportionate distribution, right?
I have not seen so many code sections in one problem before.
This is there's a lot of nice SAT words, a plethora of code sections,
Yes.
a myriad of code sections. So anyway, it can get ugly quickly, right? 751B, because only cash is received. Okay, and we know the receivables in this problem, the receivables are considered a 736A payment. So that being the case, how much inventory should he have received, our taxpayer? He should have received how much of the inventory? He should have received 10, and he didn't. Everyone agree? Should have received 10. The receivables are I or D items, so they're off the table. But he should have received 10, and he's receiving 0. So he's receiving 10,000 too little of the inventory and 10,000 too much of the cash. I know Kevin's chomping at the bit. What are we going to do here, Kevin?
Give them what they don't want.
Give him what he doesn't want. We're going to give him inventory, right? How much inventory? $10,000 worth of inventory, right? With a basis of how much? Well, there's a 754 election in effect, right? So what's the basis now of his share of the inventory? 10. We're going to give him $10,000 worth of inventory with a basis of 10. And he's going to sell that. He doesn't, right, Kevin? He doesn't want the inventory, right? What is he going to buy? Or he's going to buy cash, or cash is going to buy his inventory. Is he going to have any gain or loss?
No.
No, right? So therefore, what's gonna happen here? He's gonna receive so the A's estate's gonna receive a $5,000 guarantee payment. He's gonna receive $10,000 in cash, right? So A's estate, let's just write this out. He's gonna receive a $5,000 guarantee payment. Why? 736A. He's also going to receive $10,000 under 751B. Okay. So if he receives this, 15,000, and he receives a total of how much? 45. How much is left to distribute to him? He's got to get 30,000 more, right? Everyone agree? He's got to get $30,000 more of cash. He starts off with a $40,000 initial basis. Everyone agree? Starts off with an initial 40,000.
That's fine.
We're going to subtract 0 for the 736A payment. That has no effect. 736A payment has no effect on his basis. I don't know what it just hit by mistake. 736A. And then the 751B phantom distribution, right? Remember, he got $10,000 worth of inventory, right? That he didn't want, Kevin told us. That reduces his outside basis, right? To 30,000. So when he gets the cash, and is 30,000 and his outside basis is 30,000, guess what? No gain or loss. All right, so let's summarize what's going on here with problem 2A. Problem 2A, our taxpayers getting $45,000 in cash. We know there's a 754 election. We know his outside basis is 40, his inside basis is 30. That's where we get the $10,000 adjustment. As a result of the $10,000 adjustment, we got to adjust his basis, inside basis for the inventory and goodwill, which Tom would tell us often there is no 754 election. Like there is here, so the outside basis increases. 736A, right? Under 736A, he's going to recognize $5,000 of ordinary income, guaranteed payment. A's estate then has to go through and gets a $5,000 guaranteed payment. And remember, he got $10,000 in cash already as a result of 751B. Everyone agree? And that, remember, the inventory was distributed to A, and that caused his outside basis to drop to 30,000. So when he gets the $30,000 in cash, there's no subsequent gain or loss. So A walks away from here with a $5,000 gain, period. Everyone agree? Which makes sense when you think about it, because he died, his basis went to 40,000, the fair market value is 45, should recognize $5,000. Game over. All right? Let's look at problem B. Same as A, except this time there's no 754 election. Okay, there's no 754 election, guys. What's going to happen in this context? So we still have a 736A payment. We still have a 736A. What do you say, Carlo? Yes? No? Maybe? Yes. Right? We still have a a 736A payment of $5,000, right? And the outside basis is going to be what? Once again, 40,000, right? Starts 45,000 fair market value, but the 736A payment, right, causes the outside basis. The 736A payment constitutes an amount of IRD, right? Agreed? So the outside basis is 40. Now, does 751B still apply? The 751B apply here. So outside basis 45 minus 5 or 40. So he has $5,000 ordinary income under 736A. Is there still a disproportionate distribution? Your answer is hell yes, right? Still getting cash, still ain't getting that inventory, right guys? Still ain't getting that inventory, and numerically it's the same amount, meaning he's still being shortchanged by $10,000 worth of inventory. The only difference in this problem is what's the partnership's adjusted basis in the inventory. What's the difference here? There's no 754 election, right? So there's no adjustment to it. So the inside basis, Ramon, is only 5, right? Everybody agree? The inside basis is still 5. He's getting $10,000 of inventory with a $5,000 basis, right? Inventory with a 5K adjusted basis, 10K fair market value. As Kevin was saying, he doesn't want this inventory, right? So he's going to sell it back for cash. But guess what? This time when he sells, he has $5,000 of ordinary income, right? So this is not as good a result, but you might say, okay, when it gets to distribution, everything will wash out, right? Because when it gets to distribution, remember, he has a $40,000 outside basis, right? The 736A payment doesn't do anything to his outside basis. And what's going to happen as a result of his 751B? What happens to his basis as a result? Remember, when they distribute the inventory, when the partnership distributed the inventory, what did his basis go down? By how much? By only 5 this time, right? Because the inventory had an adjusted basis of 5. So his outside basis went down by 5 because of the 751B phantom distribution. So his adjusted basis went down to 35,000. How much cash is he getting, guys? How much?
45?
I don't know. How much cash is he getting here? Well, put it this way. He got a $5,000 guaranteed payment. Everybody agree? He's getting, as a result of the 751B, he got $10,000 of cash. So he got 5 plus 10. He already has 15,000, right? So how much cash is left to give him? 30, right? 45 minus 5 minus 10. So 30, he's going to get $30,000 cash. What's his outside basis? It does matter, because this, on a liquidating distribution, what happens if you have an outside basis of 35 and you get cash of 30? $5,000 long-term capital loss. So he gets 30,000 minus 35. as a 5,000 long-term capital loss. Okay, Peter, that looks right. Right? So, this is not a good result for a taxpayer. It would have been better had there been a 754 election, in effect. Ramon?
Why is the 736A does not affect his basis?
Like a guaranteed payment, it's not going to affect the basis. It's considered almost separate and apart. It's not, doesn't affect them. We didn't do it in the prior problem either.
He's not getting those, the IRD.
Yeah, but then, right, the IRD is not going to be considered like part of the partnership. It's going to be considered separate and apart. Yeah, you're right. The accounts receivable does constitute 736A/IRD, but it's not going to. There's no bearing on the outside tax basis. Let's keep going, guys. We're on a roll. Question C, 2C. If the agreement is silent as to goodwill, but either a 754 or 732D election is in effect. So again, the authors are just going to test your knowledge base with respect to these payments. Now this is a little tricky, guys. Be careful before you respond. How much is the 736A payment? And again, B, this is a way for me to affirm why we're doing this tonight is because it's going to hopefully emphasize things that are in prior chapters. Everyone, come up with a number. What is the 736A? Pretend it's the exam. People on WebEx, don't go to sleep on me. Give me a number. To all of you people on WebEx, give me a number what the 736A payment is. We got a few of you. Anna, Annie, Leon, all of you. Michael, Peter, Philip, Alvin. Anyone want to type in a number?
C.
736A payment. Do you have a number?
Yes.
I hear a number. Ramon.
10.
10. Other numbers.
10.
10.
After 8 o'clock rule.
Simi, you're holding back? 10. Anyone else have a different answer?
0.
0.
1 0.
All right, let's think about this. What's 736A? We know it's the receivable, so we know that's 5, right?
Yes.
Gotta be 5.
But the 5 is a part of the
Well, we're asking, IRD and 736A are synonymous here,
Yes.
right? This is a 736A payment.
we already used the receivable and the IRD, right?
We're using them
Yeah.
synonymously.
So let's okay.
But in this case, so the accounts receivable is the 736A payment. Agreed? Agreed. But as Ramon, Simi, and some others have pointed out, the goodwill, right, unstated goodwill is the 736A, and this is where you guys impressed me tonight because it's only the appreciated portion, right, Simi? It's not the entirety of goodwill. It's only the appreciated portion, right? So it's not, that's a big mistake students make on the exam. Okay, everyone listening? Big mistake students make on the exam. They treat the entirety of the goodwill, unstated, as a 736A, And no, it's only the appreciated portion. So we have 5,000 the receivables, 5,000 of the goodwill, the appreciated portion. So our 736A payment, guys, here, $10,000. Okay?
But I did say 10.
You did say 10.
You do.
All right.
Good.
Yeah.
I'm going to give you credit, Joan. I saw
Jonah
your
is good.
thumbs up.
For the moment I was wondering what he's changing.
You're getting a name.
Done.
All right.
And I know it's kind of my fault.
So, what is the estate's outside basis, guys? What is the estate's outside basis? Give me a number, Ben. And Hoffman, see if you agree. Francisco, give me the final word. The outside basis.
35.
35, absolutely. We started at 45. We go down minus 10 to 35, right? We subtract out what constitutes the IRD payment. So 35 is our outside basis, right? Now, what's our share of the inside basis? So this is the outside, 30. So we know we're going to have a 743 B adjustment of 5,000, right? And where is that 743 B adjustment going to go? It can only go to items which are not IRD. There's only one thing that is not IRD here, guys, right? The inventory, right? So that $5,000 adjustment can only be allocated to the inventory. Guess what? What are we going to get? Kevin? I almost caused you to drop that phone. Kevin, what's going to happen here? Is it a disproportionate distribution? Yes. What's going to happen here, Kevin?
We're gonna give them what they don't want.
We're going to give them what they don't want, right?
Can we just say that on the exam?
You
Yeah.
just say whatever Kevin said.
Yeah.
Okay?
Yay, Kevin. And not mention.
And what does he not want, guys? He does not want the inventory, right? Does not want the inventory. So we're going to give him the inventory, right, Kevin? We're going to give him. And how much inventory are we going to give him? It's disproportionate by 10,000. So we're going to give him $10,000 of inventory with what kind of basis? No, 10, right? Because there's a 7. So he's going to get $10,000 worth of inventory with a $10,000 basis, right? And then it's going to be bought back with cash. No gain or loss to him, right? So what's our, his outside basis starts at 35. There's 0, right, Ramon, for the 736A payments. That has no bearing on his outside basis. And $10,000 reduction, right, under 751B, right, when they distribute out the property, and his just basis becomes equal to 25. How much cash is he now going to receive? From C. Isn't he just going to receive $25,000 of cash, guys? He's going to get right. He got he was going to get 45, but we took care of $10,000 vis-a-vis the 751B. And we took care of another $10,000 vis-a-vis the 736A payments. So he's gonna get $25,000, the resulting $25,000 of cash. So zero gain or loss here. The point is, he's gonna have $10,000 of ordinary income, period. Why? Because that's the embedded IRD. That's the embedded IRD. Right, Peter nailed it. Right, I'm sorry, Peter, he's gonna get $25,000 in cash. All right, everyone see that? He's gonna get, the 45,000, 10,000. The 45,000 he's receiving, 10,000 is 736A payment, 10,000 is a result of this 751B constructive sale. That leaves 25,000 left to be distributed. Question D. Arrangement is silent as to goodwill, and neither 754 and silent as to goodwill, and neither 754 nor 732D election is in effect. So if it's silent as to goodwill, okay, once again, similar to what we had, but this time there's no 754 election. So how much is our 736A payment, guys? 10. Isn't it 10? Right, Viva? The 736A payment here, once again, is 10,000, same as before. You know, Kevin, what I'm going to say to you, is there a disproportionate distribution? Yes, right? Everyone agree? Getting cash, and what is he not getting, guys? Not getting inventory, right? How much inventory should he have gotten? $10,000 again, right? So there's going to be a phantom distribution of inventory with a $5,000 adjusted basis, $10,000 fair market value, right? There's no 754 election. And guess what on the sale of that, right? Go ahead.
For the goodwill, it is not silent for the goodwill.
That's why it's $10,000. Because there's $5,000 of receivable, and the appreciation in the goodwill is 15, or 1/3 is 5. So 5 plus 5 is 10.
It's not stated here. It should be
But it's silent, so it's not stated goodwill, so it's 736A.
It's not stated.
Okay? All right, so what are we gonna have here? The estate's gonna have $5,000 of ordinary income under 751B on the sale, on the constructive sale. So once again, the estate's gonna receive how much cash when all the dust settles? It's only gonna receive, right, it's gonna receive, starts with 45, but it's gonna have $10,000 of 736A payments. And it's gonna have $10,000 worth of 751B payments. So how much cash is it gonna receive? $25,000 of cash. $25,000 of cash. Just like it was in the prior problem. Okay? Now, what's his outside basis here? We start off with 35,000, right? We said that before. 736A, Ramon, is no impact here. And when you distribute the inventory, the basis goes down, right? Inventory is the basis is going to go down. What's his outside basis, guys? 30,000. He's getting cash of how much? We just said 25,000, right? Gain or loss. If you have an outside basis of 30 and you get cash of 25, what happens? Long-term capital loss of $5,000. So, to summarize, he has $5,000 of ordinary income as a result of 751B, and he has $5,000 long-term capital loss as a result of this distribution. Final question. Oh, sorry, go ahead. If you need to take a picture, go ahead. Just to keep everyone's attention and not to lose anyone. This will be our final question tonight. We will not do question 3 because question 3 could take 45 minutes, and I promised you a reprieve here, so of sorts. We got one more question for tonight, so don't lose me. Keep the pace, guys. Keep the pace. If you know your stuff, Jacqueline, you will. I promise you.
It would be 2 hours and a half, like always.
It's gonna be 2 hours and 45 minutes because otherwise Jacqueline will complain. All right?
Okay.
Question E. The agreement is silent as to goodwill. Okay? Hint, hint, silent. Got that, George? Silent as to goodwill. Neither 754 nor a 732G election is in effect. And the partnership is one in which capital is a material producing factor. And tenants go up. Now we have to figure out what's 736A and 736B. Do we have any 736A? Do we have any 736A here, guys? Julia, don't whisper. Don't just say no. If I'm the client, you're not going to instill confidence in me. You say, I don't think so. If you say no, the client's going to say, gee, Julia knows her stuff. No, there's no 736A, right? Because here, capital is material producing item, and only what kind of item can give rise to 736A? I heard someone whispering or shouting it. A premium payment, right? But there's no premium payment here, right, Ken? So there's no 736A. Which means there's no 736A, there's no 753. 753 says treat items of that are 736A as IRD. I repeat, 753 says treat 736A payments as items of IRD, but there is no 736A. Does that mean that there's no IRD here? And the answer is no, because we have those two cases, right? A quick case and good haul case that say sort of, you know what, there's got to be IRD here. So you have to identify the IRD. And what would be the IRD here? How much IRD is there? Say again, Viva? 5,000. Okay, 5,000. Where does that stem from? The receivables, right? So what is A's outside basis? 40, right? 45 minus 5, the IRD. A's outside basis is 40. And once again, is A getting disproportionate distribution? And we all know the answer by now. Yes? And then, of course, what do we have to do, Kevin? And what does A not want? It Does not want the inventory, right? So that being the case, we're going to give him the constructed distribution here. In this case, let's just take a look at this problem, because now both the receivables and the inventory, let's look at the receivables and the inventory. He's not getting any of those, right? He's just getting cash. And he's getting, right? Normally he would have gotten 1/3 of 45,000 or 15,000, right? And he's not getting any. Everyone agree? But I'm speaking too quickly when I say this. The receivables aren't counted here, right? Because they are, well, actually, for the purposes of 751B, they would be counted. Well, they constitute an item of IRD. Let's do this, guys. Rather than, this gets a little bit more complicated than I would like. Let's do this. Let's end with problem D. D's giving me the 2 thumbs up.
That's an excellent gift, Dan.
There's an excellent gift. Don't say I never let you guys out early. But here, guys, do me a favor.
The first one, by the way.
Do me a favor, if you could, a few things. Bear in mind, for those who came in a bit late, final exam 2 weeks from today, probably will be 2 hours and 45 minutes. If you can come a bit earlier, I'm going to try to do this in some sort of alphabetical order. We'll see if that comes. I'm going to try to weave that in. I will be around, but for Friday and Saturday, aside from that, I'll be around, so if you have any questions. Guys, partnership tax is not easy, so I do want to say thank you for giving me all you've given me for the last 14 weeks. This has been quite a marathon. All right, so I look forward. Everyone have a great Thanksgiving, and I will see you in 2 weeks. And those people on WebEx, have a great Thanksgiving. I'm gonna wish you good night, and I'm gonna